Hi there. Welcome to Monday Moment with Quinn. I'm here with Dion. Where are you, Dion?
I'm in the sunshine today.
Yeah,
I stole away for a
lovely,
couple of.
lovely, really nice office you have there.
Yeah, it's nice to get away sometimes.
Yeah, for sure. So I thought we'd take a moment and go over like just the trend of what's happening this year. Um, just a little bit about on the mortgage side.
Yeah, so yeah, it's been an interesting year. Obviously, we started out the market in general started out very strong. Then March came, and in the middle of March, we were hit with this pandemic, which we're still dealing with. There was some questions about what would happen to liquidity, which is the bank's willingness to lend money. They were concerned about potential defaults if people were losing jobs. The government stepped in with those deferral programs, which has basically meant that the status quo has been maintained. And these deferral programs are set to expire in September, October, somewhere around there. And there's a big question mark as to what's going to happen there. But I can tell you what has happened up to this point is that um, interest rates have dropped since the start of the year. The projections from the Bank of Canada is that they're probably going to be very low, not just for 1 year, and it's very rare that they actually give longer term projections. But the interpretation of the last announcement from the Bank of Canada is that they're likely not going to be moving rates for a couple of years. And we haven't had these types of strong indications about stable rates for very well for in my history as a mortgage broker. And again, it's just come down to the fact that we're going through something that we've never experienced before. The government knows that increase in interest rates in a time when there's this much uncertainty is not a smart thing. And so I feel that based on all the information that we have right now, that rates are going to remain low for quite some time. So we're seeing rates, around the 2% mark, and they're probably going to be staying there for quite some time, 2.5%, which is what we probably safe to say we're going to get used to for the next year or two.
Circling back to what we talked about a couple weeks ago in regards to CMHC and the changes they made to as of July 1st, are you seeing
Yep.
any impact of that in terms of your side?
Yeah, not really. In that, the other two insurers that said they were not going to change rules have not changed rules. So while CMHC did change rules, there are still two other insurers that are still out there operating under the old guidelines. So we have tested that since the July 1st deadline, and they've come back positive, meaning that the debt ratios which were allowable at 35 and 44, 39 and 44, are still available with those other insurers. So I personally, in my business, I haven't seen a major impact. I still think that if you're a first-time home buyer, that you should be prepared for potential changes with those other insurers. But as far as we can see right now, no changes have really come into play there.
Good to know. That last second there, you cut out. So, do you mind mentioning that again about the first-time
I'm
buyers?
just saying that while things have not changed, if I was a first-time home buyer, I would do the best I could to be as strong as possible, under the assumption that the rule changes that happen at CMHC may one day change at the other lenders. I just don't know when that would be. So if I'm a first-time home buyer, what I'd be doing is ensuring that my credit score is above 680, and preparing for the potential that if your income alone will not get you there, you may need to be talking with parents or family members about co-signing on your purchases.
Got it. Got it. Good to know. I mean, it's nice to see that everything is remaining a little bit stable and they're not changing anything, right? But I mean, it's kind
Yeah,
of an
we've
indication.
seen, we've seen that it comes down to confidence. When people feel stability, they feel confident. And what we've seen is that they're willing to actually come back out into the market and buy property. And we're very busy. Are you seeing the same thing, Quynh?
Well, when I looked at the comparison, June of this year versus last year, I mean, the numbers are almost similar in terms of listings, right? But the prices have gone up, and in some cases, over 100,000. So the expectations for buyers there is that they're seeing less inventory, but they're expected to pay higher price, right? So I see the confidence in the market. I mean, the trend being that in the 416, I mean, condos and townhouses are still the highest in terms of purchases. But the 905, we're seeing a lot detached, right? So the trend that I've seen is that, people are changing the way they live and the way they work. And in terms that's changing the way they think about the market and the space that they need, right? So I don't know about you,
Yeah.
but I am seeing a little bit of a shift from the 416 to the 905 for sure, in terms of what people are getting, space versus affordability and value, right?
Yeah, well, we've seen this trend for many years in that, you know, as the downtown core has become more and more expensive, people have moved
Yep.
out to the 905. And I think that this whole transition, where a lot of people who traditionally work in offices are now able to work from home, means that, I think that there's a lot of speculation that this may continue even after the whole COVID issue is solved. Many businesses may allow employees to continue to work from home, which means that proximity to the downtown core is going to be less important. And I can tell you, I'm fielding more questions from people who are in Toronto and wanting to move out further north to places like Innisfil and Barrie, Aurelia, or further east, past Oshawa, past Mississauga, out to Hamilton Way. So people are basically saying, okay, my boss has said that even after this is all done, I can continue to work from home. Maybe not every day, but 3 or 4 days a week, which means that people are going to be less dependent on the need to live close to the CBD, central business district. So.
Oh, for sure. It's a conversation I'm having more and more each day too, right? I mean, the reality is, I think that Toronto will bounce back, providing that everything's going back. I mean, 2 weeks until hockey starts. I don't know if you're a big fan, but I'm kind of looking forward to it. It's been different without the sporting world, but I think as we open up, I think that the market is. I think we're lucky that I think it's going to be a stable market, and there's going to be some opportunity. But for sure, it's still a seller's market. So.
Yeah, I'm seeing the same. I've got lots of clients missing out on multiple offers
Yeah.
because a good property that's priced well will have 5 or 10 offers on it right now. So. Yeah.
Oh, for sure. I mean, that's a whole new discussion. My opinion on multiple offers, and but yeah, definitely we're seeing that, and more so in detached homes and townhouses, right? Whereas a couple of years ago that was something that was happening quite a bit in condos, but I'm seeing that the townhouses, the semi-detached, and the detached, out in the outskirts, let's call it outskirts, suburban, Etobicoke, and even beyond to Mississauga, Oakville, Hamilton. Yeah, it's a strong market still for sellers. But I
Yep,
won't bug
yep.
you too much because you're looking like you're having a good time out there. Enjoy
Yeah,
the rest
yeah.
of your day.
Thank you very much, Quynh, and I guess we'll see you next week.
Yeah, see you, and have an amazing week. Bye.
Thank you.